Hey guys, sorry that I forgot to start the recording. So we'll start this where we'll pick where we ended up off. So you've missed a little bit, but you'll see some of what we're doing. So it's now currently March 16th, and I'm going to crank this to March 18th. We've rolled at the money, and I'll click go. And for those of you who haven't used On Demand, it's a great way to just practice a year's worth of this rolling. So you get a little experience. So once you've done,
we don't see the screen.
In 3 or 4 hours, you've experienced a year's worth of rolling. Then when you do it for real.
How to do that in Thinkorswim?
Okay, first you click on trade, and then you click over here to On Demand. Okay.
We don't see your screen. We see you.
Sorry.
We don't see your screen.
Sorry.
On Demand? Yeah. I don't see that.
All right, here we are
on Demand. Oh, okay,
you click on trade, and you click on Demand. Okay. All right, so it's now March 18th, and we're up 25.50 this month. So I'm going to click on March 18th. I'm going to create a rolling order. Its default and toss is to the next expiration. SPX is trading at 24.02, so I'm going to round down to 24. You will never experience again what you've experienced last March, but it's costing me a $68.80 debit. Why? Because look at what SPX has done, over the last 5 days. It's gone from 27.96 to 24.02. So it's dropped 300 points. So here we are at March 18th. We're up 34.45. I'm going to roll this March 18th. Create a rolling order. SPX is trading at 24.03. I'm going to round to 24.05. It's costing me $119.65 debit. Cost of this trade is almost $12,000 per contract. So that executed. Once again, Bill doesn't roll down. I choose to roll down. Bill chooses to roll horizontally if the market goes down.
Yeah, let me clarify one thing.
Okay.
I will do a horizontal roll if it looks like we're still in a bullish momentum.
Okay.
If it looks like the market is really pulling back, my plan is to just get out and either sit in cash or go to a vertical call spread, one of the two.
So you get out of them or you go to a call spread. Gotcha.
Yeah, one of the two. The only reason for the horizontal is because I think it's going to come back in the next couple of days, and I get a lot of decent value by all that intrinsic value on the option.
Good. Thanks for that. So we're up $5,000. It's now March 20th. SPX is currently trading at 23.69. So now I'm going to roll it to. Now, what I want you to notice here is my long put is ballooning in value. It's now at 23.70. SPX is at 23.69, 23.70. So it's now in the money. So we're going to roll this guy to create a rolling order. Go into 23.75. I'm rolling down, but I'm still getting a $63 credit. So we're going to take this now to, I don't know why it did that, but it defaulted for a full week roll.
How often do you trade? Do you roll?
How often do you roll? You roll at each expiration. So if, let's say tomorrow.
Let's say on 13, right? At the beginning of the trade, it was March 13, you put the trade on the 6th for the 16th. On the 16th, when do you trade? When do you roll? At the end of the day, middle of the day, or at the beginning of the day?
Bill tends to time his rolls, and I'll let him explain how he times his rolls. I tend to go into the Analyze tab and see if it's going to be helpful to me if the market's going up or down. Then I look at Pong and say, is the market going up or down? If I can't find a specific trend, if it's ambiguous, I'll just roll it in the morning.
Mhm.
Somewhere
And yes,
Like morning, define the morning. 9:30,
by 10 a.m.
10, by 10?
Central Time.
Okay.
yeah,
So-
So at 11 Central, okay.
So if you were recording this in the second 2 weeks, we've now made $6,190 on one contract in the second week of March. So I don't know if you guys recorded it, but I think the first 2 weeks we were up like 8 grand. The second week we're up 6190, which you add those two together, you're up like 14 grand in the month of March with one contract, doing these in 2 week diagonals.
hey Dale, let me add one more thing to what Lana was asking.
Okay.
I do the mornings and I have a couple reasons for doing mornings. One reason is because, I used to do them in the afternoons, and market makers got kind of smart that everybody rolls in the afternoon, so they increase the bid-ask spread. And what you generally find is that you'll shrink a little bit, a couple percentage points, but it adds up over the year's time. So morning to me works out much better. But secondly is I will watch EcoTrend, and preferably somewhere between 9 o'clock Central and 10:30 Central. I'm waiting to see when EcoTrend will pull back, and it'll turn from like a pink to a green or something like that, where it's on the bottom coming back up. So I don't want to do it at a time, I've seen this before where you get the market open, EcoTrend goes all the way up, and then all of a sudden it pulls back and then goes back down. I wanted to do it on the bottom of the EcoTrend. So thanks, Dale.
You're welcome. So here we are in April. VIX is now trading at 65, which is still big, right? And so we're starting this again in April. So I bought the 30.
Hold on, Dale, you're going fast. So let's say 16, your 16, you roll to the 18, then to,
All right, I'll recreate it for you, Lana.
and then what was your final, was it on 20th?
Okay, I'm out
How
of
do you
March.
close? My question is, how do you close that whole thing?
Well, you would just select both of them and then you would close. What I did is I
On
just
the last day, right?
I do it before the diagonal turns into a vertical. What that means is I choose, and I think Bill does the same, never to roll it so that your long and your short expire on the same date.
Yeah.
Then it's no longer a diagonal, it's a vertical. I don't think personally there's any big issue if you choose to roll a diagonal into a vertical. It's just that I haven't fully tested it and I'm choosing to leave it as a diagonal rather than a vertical on the last roll.
Yeah, Lana, it's your choice. If you want to do that, that's fine and dandy. You're not going to get burned as long as you're still in that trend of the market.
So I'm going to go ahead and did you see how I set this one up, Lana?
Mm-hmm.
Okay, so I'm going to click confirm and send now, and it's taking a buying power of $15,000. So if you can't take that in your account, you might choose to trade SPY. I would say that for SPX, it will vary anywhere from 5 to 20,000 in buying power normally per contract. So here we are, it's March 27th. You see what I've got set up here. There's $454 in daily theta decay, 158 in positive beta weighted deltas. So I'm going to crank this March 27th to March 30th, 11:15 a.m. And you can watch it in pre-buffer. Lana, if you choose to do this in TOS, this is what takes the most time, is just sitting around and waiting for that thing to pre-buffer. So it might be helpful to multitask or be reading something in between this so that you don't, so this is ready. So it's March 30th now. We're up $1,985 in the first 2 days of this roll. So I'm going to take this March 30th. I'm going to create a rolling order. It's trading at 25.98. I'll round up to 2,600. I'm collecting $99.60 or $37.35 credit because VIX is trading at 59.54. Confirm and send. Buying power is only now 2,200. Why? Because it's narrowed.
So Dale, does that mean that in general, that when you're setting up the very first one, that the narrower the spread, so like at the moment the spreads will be narrower because volatility is so low that it takes less buying power, right?
It varies depending upon what's happening in the market.
Yeah, because actually I've just, as I said that, I realized that if you're getting an awful lot of credit for your short, then that will also affect how much buying power
Yep.
it's going to take.
So we're up $3,000. It's now March 31st. We're rolling March 31st to April 1st. There must have been some kind of a holiday or something. So it's like 1 day from now. We're rolling it to 28. So I'm going to round up to 26.30. We're getting $128 in credit. No, $29. Sorry, sometimes it takes TOS a while to reset. So $29.55. So because we're getting so much credit, all we've got to do is we're hoping the market doesn't move outside that range. So it's costing us $2,900 for this trade. Currently now the margin is 21,000 because it's now what, 210 spread difference. Sometimes Bill tends to adjust his. I tend to leave it alone unless I can't take this buying power for some reason.
So the reason I adjust mine is because I'm watching Delta. And I want to make sure that I keep my short delta significantly above my long delta. And my rule of thumb is if I start hitting 35 on my short, I roll it up.
And the reason I'm not is partially because I'm doing it on 15 different accounts. And if I multiplied that complexity, pretty soon I'd get overwhelmed. So
You'll turn
we're
into
up.
a drinking guy.
There you go. So now we're down. So I want you to show you that there are swings in this trade. So now we're down 3,700. So I'm going to create, and why? Let's just see. Let's see what's happened to SPX. And my guess, it's 2489. So it's gone down from 2647. What's that? 150 points. It closed down from 2590 to 2490. It closed down almost 100 points from where it was trading the day before. So that's part of the reason why, we've lost money in this roll. So we'll go from April 1st to create a rolling order. See what VIX is doing now. VIX is now at 55.
So you don't care? It doesn't bother you that it goes down like that and then you have this minus?
Well, yeah, you care, but I'm managing it over, and I've back tested it over a full year. So I know, and we just did this. I don't know when you came in, Lana, but we made almost 14,000
On what?
in March. So the fact that I'm down 4,100 and I made 14,000, I'm still up net 10 since I started on March 1st. So yeah, but I want to also impress upon you guys that there are some considerable swings. And if you can't handle the swings in SPX, then you might not want to do the trade, or you might want to do it in SPY. Now I am doing it in the roughest month you'll probably experience in your life, which is last March and last April when COVID
Yeah.
was announced. So hopefully you guys won't ever experience this level of, unless you have a 9/11 or, you know, something happens again like this. So here's April 1st. I'm going to create a rolling order to 24.85. I'm having to roll down 200 points. I don't have to, but in this strategy, it's a $62.20 debit. So now still getting 146 positive delta and $700 a day in theta decay. That's what's crazy, isn't it? Ton of theta per day, which is, I always say, it covers a multitude of sins.
So when you took, when you took the debit, right, that was your loss.
Well, it's just, it's a
Right.
loss against, but I've collected credit along the way. So maybe you
But
didn't see there were times
on
where
the, on the last one, you took the debit, so which is if you have to keep the track of how much you get the first, and then
so keep track of the net liquidity. So we're now down 2,700 in this 2-week cycle.
okay.
And we're here at April 3rd. Every 2 weeks, I'm going to reset this so you can see how it performs. So here we are at April 3rd. VIX is at 51. SPX is trading at 24.74. So 3 days ago, it peaked at 2,600. So it's down, 138 points from 2 days ago. So we'll roll this April 3rd to 24.75. And now I'm collecting $18.05 credit. And now the margin is only taking 5,500. So I'm going to change this to April 3rd to April 6th. And I think once I finish this 2-week cycle, that'll be enough. But I just wanted to show you guys, and I wanted to encourage you maybe to run a year's worth of these or 6 months of these. If you have access to TOS, you kind of develop a pattern and you kind of see how some things are performed. Now we're kind of down $3,000 for this cycle. So let's take the March 6th, create a rolling order. 26.30. So it looks like that the market has kind of gone up a little bit. We're collecting $40.32 credit. Now we're using 21,000 in margin because there's a bigger spread here.
Yeah, and the market moved up a lot, so now your spread is much wider.
Yeah, so you see how the market
it
shot up.
Huge gap up.
It gapped up, so it went to 26.28. So it's trading. It's up almost 160 points, right? So we'll change this to April 8th. We're at 606. We're forcing the market to beat us in terms of this theta decay.
Well, look at your theta number.
And I don't know if that's necessarily accurate because we're kind of in this limbo. We're on this time machine, right? We just stepped into the Back to the Future time machine. And so,
but you have got a lot of positive delta there.
Yeah. So now it's April 8th and now we're up $192 total. So now it's the 8th and we're rolling it. So I guess what I want to impress upon you guys, if you choose to trade SPX, you can have some swings. So it's not for the faint of heart. But you gain some confidence by doing a year's worth of these, that it is a profitable strategy if you can stand the swings. So we're on April 8th. We'll turn to April 9th. It must have had a holiday in there. choose to do it, multitask, because this pre-buffering, depending upon the speed of your download speed and the speed of your computer, may take a while.
So is that
Just so everybody knows, the diagonals are not sanctioned by Pong. So what Art and Tammy are doing with the 0DTE, we're using their charts. Art is very interested in what we've started here. But it's not like, it's what they promote on the website or anything like that. It may be someday because there's a couple kinks like these drawdowns that Dale's talking about, and Lonnie, you're saying the same thing. I think Catherine, you said about drawdowns too, but there is a locked group out there because it's not sanctioned that I post my stuff out there. I think Dale posts out there every once in a while as well, but Art and Tammy don't want people to lose focus of the 0DT and all the stuff that goes on there, or get confused by this diagonal versus a repair diagonal. So what I'm going to say here is, if Tammy and Art say, "Hey, yeah, go ahead, we'll put you in that group," just send them an email and say, "Hey, I'd like to be part of the trades diagonal group," and you'll see what I'm posting. You'll probably see what Dale's posting when he gets time, but you'll see my documentation as well. And I'm always refining the documentation. I just redid some of it last March when there was the big drawdowns, and I'm like, no, this going out 30 days is kind of crazy right now. So let me go out 2 weeks and see how that works. And it's been working really good.
So as you can see, here we are at April 9th, and you're up 31.21. Yeah, so consider Bill and I as two guys in a garage that are kind of taking some things with Pong and kind of exploring, and we both have kind of our own style. And so, yeah, so all of this stuff is not sanctioned by Pong necessarily, but it is part of what Tammy has done a write-up on moving it to a diagonal. And so I just wanted to show you kind of how I'm using it. And for Lana, I know you were concerned when we had that, what was it, a $2,000 drawdown, but here we are at the end of April. Well, no, in the middle of April, and now we're up 3,100. And I just have tested 3 2-week sets of these. Now, granted,
Dale, how does this differ from Tammy's repair strategy then?
Okay, how it's different is that I always roll to at the money.
Okay.
I think that there's times where Tammy will choose to roll horizontally, and Tammy tends to look at Pong and move back and forth between put diagonals and call diagonals based upon what her guess is about the trend.
Okay.
And it is my belief and feeling that it's easier for me to pick a trend daily than it is necessarily for me to pick a trend 2 weeks out. So for that reason, I tend to try to put some kind of a combination of a put and call diagonal that's some kind of a ratio. And I don't mind putting 2 puts on to 1 call. So there's some balance. Tammy tends to pick a direction and go one way or the other. And I think Bill is more on that camp. I tend to adjust slowly. I've also been known to put some of these diagonals on during a roll rather than waiting, because I monitor my beta weighted deltas and kind of use it as an adjustment. So there's some different, slightly different ways that that Bill and I and Tammy are using the diagonals.
Yeah, it seems to me that if you're swapping backwards and forwards from put to call, like especially I'm thinking about the last sort of month or so, you'd have been you'd have been doing it like continually switching because we've had a lot of kind of whipsaw more recently. So
And
yeah,
so, for
like you're having to
example,
take.
I trade my brother's account in SPY, and right now I'm running uh, seven put diagonals and 3 call diagonals
Right.
simultaneously.
So that's to try and minimize the effect of the whipsaws. Is that right?
And it's a balanced strategy. So in a way, the calls will hedge the puts and the puts will hedge the calls. Sometimes they could both win.
Yeah, especially if you get a couple of days where we've had some times where actually we've had some swings in the market intraday, but then it's like finished where it ended.
Unchanged. Yeah. And when it
Yeah,
finishes
we did that like
unchanged,
4 days in a row or something.
you'll make bank on both the puts
Yeah.
and the calls if the
Yeah.
market ends up unchanged within a 2-day period. So that's kind of, I didn't mean, I wanted to just do this and say, hey, it's just the way I do it and show you kind of, so now we did 3 sets of 2 weeks. So we did 6 weeks of these.
Yeah, that's actually been quite really interesting to see
Dale?
that and see how it's actually changing the margin requirement. I can see that now you're like sitting at a 30,000. Although I have to say that this period of time that you took us through was one of like particularly huge move.
Yeah. And I wanted to pressure test it. You know, anytime you want to test a system, you pressure test it in the most difficult time. So, right, if you can take the most difficult time, you can take anything. And so I wanted to take you through a really tough time so that if you're prepared for that kind of margin requirement,
Right.
you know, if you can handle the toughest time, you can handle anything.
Dale, I have a question. This is Gregory. How does it perform in the last 2 weeks going up?
How is it? Well, a put diagonal will do really well when the market goes up.
So,
I can tell you that I got 165% return on my capital in the last 2 weeks.
that's nice. So what you show is that it's actually doing pretty well when it drastically drops, but then you're telling us that it's also behaving extremely well when it goes up.
Okay, well, let me offer the disclaimer. It does not do well in smaller moves down. In larger moves down, the long put can explode in value, but at the same time, I've shown you what the VIX was at, and there was times where the VIX was at 70. So that short premium just explodes. And so you're getting so much money from that if you just break even on your short strike, your long put is exploding in value. And it's a very weird thing. And that's kind of why I wanted to show it to you. Otherwise, people, you know, when I first showed this result, Bill was like, what? You know, and like, how could that happen? And it's a combination of an exploding VIX level, exploding premium, and this long, but you see in this last 2 weeks, this long put is only worth $22. But there were times where I did it where that long put was worth 13,000.
Understood, but the 76 weeks happens, like you said, probably once in a lifetime. It was the highest ever.
Right. Do you guys want to pick any time period? It can't be the last 2 weeks because I think on demand takes a while before it actually works. But if you want to look back at time,
what about doing kind of like the period between like mid-January to mid-February? Because I think we got some downward movement, but not huge.
Of this year?
Yeah.
Okay, let's do
Yeah,
it.
the market kind of dropped a little bit towards the end of January, and the interesting thing is that we did get an increase in volatility, but it didn't go up by very much. We weren't up at the 50s, 60s, 70s.
Okay.
I'm not even sure we broke 30, to be honest.
And anybody that feels like they've had enough, feel free. You know, I'm not going to take it personally if anybody leaves.
Dale, basically your long put will be always like, there could be some cases when it is up, right? When you need to close it, but essentially, usually it's cheap.
If you're buying something that's 35 delta, usually it's
Mhm.
cheap. And here's my analogy to this.
Like, I mean, when you're gonna close it, at the time you're closing it.
Usually if the market has been going up, it's going to be cheap. If the
Mhm.
market is crashing down, it's gaining in value.
Okay.
So let's go ahead. I've reset my value to $100,000. It's now January 4th of this year. So I'm going to look out here and pick 16 days. Let's do 16 days from now. And let me go down. I'm going to hold the control button and toss, go to 35 delta. I'm going to buy this guy. And then I'm going to sell 2 days from now, 36.75 put. Sorry.
So when you
36.75.
start it, you don't do it on like today. You give it like 2 days or
You
Is
do
it-
it at the next expiration period.
next expiration. Okay.
You never do it on the same day.
Mhm.
You'd be rolling it if it was expiring today. All right, so here we are. This one took, and this is more of a normal time period, right? It's taken $7,500 in buying power for one contract.
Mhm.
It's 154 positive beta weighted deltas. It's giving you $438 a day in theta decay. It's now January 4th, and VIX is trading at 28.
So we did that for a debit, I'm assuming.
I'm going to go back to filled orders. It was $11.05 debit.
Okay.
So it's the 4th. So I'm going to change this to the 6th. We'll click go. So we're starting off with $100,000. It's January. It's coming up on the 6th. We're in our, what was the time machine called on Back to the Future? DeLorean. We're in our DeLorean. We're moving into the future. It's January 6th going into, so we're pre-buffering. As I've described to you guys, this is what takes the time. And so now we're up 150 bucks. So it's January 6th. We're now going to roll to 37.73 is what it's trading at. We'll roll to 37.75.
Market moved up quite a bit.
Yep. And we're collecting $21.70 credit.
Okay.
So now it's taken 17,500 in buying
Wow.
power.
That's quite a change.
That's quite a change, isn't it? So we're going to make this to January 8th. So since it's about a break even, my guess is, the market moved considerably. I didn't really check it here, but let me check and see. SPX 37.73. Looks like 3 days ago it was at 37.09. So now it's shot up from 37.10 to 38.16. So 110 points in 3 days. So now we're at the 8th and we're up $1,700. So we'll roll the 8th.
So that's interesting because your long would have been losing significant value at this point.
Yeah. In my analogy, it's almost like, you invested in an oil well and you're pumping out of it. So at the end of 2 weeks, you expect your oil well not to be worth much.
Right.
Because you're harvesting all the oil from it in the next 2 weeks, and it's only got 2 weeks of pump time. That's my analogy. So we're going to run the 8th to the 11th. So you don't really expect your long put to have any value by the time we're done with it unless it's in March of 2020 and COVID is breaking out. So, as you see, this is doing real well in a neutral to a slowly trickle up market. So we're now at 2,500 and it's January 11th, my birthday, and we'll roll it to the 13th at 38.15. So we're now rolling just vertically. So you can see, we're collecting $14 in credit, $268 in theta decay. So we'll change this to the 13th and go into time. So, there's nothing wrong with using this. It's just kind of a normal strategy that you like. You could choose to use it as a repair strategy. You could choose to use it as part of a diversified portfolio. But I would just caution everybody, be prepared for some swings. Don't be surprised. And depending upon when you get into it, if you have a bad swing the first time you get into it, feel sorry for you. So now it's worth 103 and it's January 13th. So we'll now create a rolling order to 38.05. The market's down slightly, but we're still collecting $7.60 credit. See, the market hasn't gone down more than that credit we've collected. So we're still making money. So now it's the 13th. We'll kick it to the 15th.
Hey, Dale, would you suggest somebody to start off in SPY because the swing would be 1/10
I
of that of
would.
SPX?
Yeah, start off in SPY. And frankly, I would say if your account is less than $100,000, start off in SPY. If you
I think
feel
I'd start off in SPY anyway.
and there's nothing wrong with starting off in SPY anyway.
Yeah.
But
I do the SPY because, like I say, my account is not big enough for SPX. However, SPY does give me an extra boost because when I open the trade, I can go one strike in the money, and that's only $1.
yeah,
SPX has $5 increments. SPY has $1 increments.
I love SPY. I love SPY as a strategy. My brother's got a $25,000 account, and I'm regularly using SPY. And like I say, I'm doing 7 puts and 3 calls in that account. I had a drawdown. I was doing 0 DTEs in his smaller account. He had, he got hit. He had some drawdowns. I'm now doing the 7-3 rolling put call diagonal. I've made it up, and now he's profitable again, but unfortunately it's taken up his buying power. So, at some point I might reduce the number of puts and calls and leave enough buying power to also do some 0 TTs for him. So now we've run it through one cycle and we're up 3,600. I let you pick it. So the date, let's see, here's the last 10 days. So you can see that the market, let's see, these are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So the market's low point has been 36.73 and looked like its high water mark was 38.24. So it's within a 200 point range in that 2-week period. So it gives you some idea. Hopefully this was helpful.
Very much so.
And, it's like anything, that which you persist in doing becomes easier. It's not that the nature of the thing has changed, but your ability to do it has increased. So if you guys have access to TOS, I would encourage you to go on and do this for 6 months. So you kind of get an idea of how it performs, then reverse and do it on calls. See how it performs. Do it on a mixture for a month or two. You know, I would say that like poker, you've all got to, and granted, we've got to have our rules, but you may have a slightly different playing style. And what I mean by playing style might be how much risk you take, how many contracts you, whether or not you roll or whether or not you put on stop losses. You know, these are all, you know, you have a winning playing style, but there's things that you may do that are slightly different based upon, you know, your comfort level.
Yeah, that was really useful to actually see that in action and seeing how. So my takeaway from it is that you know, you can see that you have some quite significant. You can have some quite significant drawdowns. It seems to me, though, more importantly, is that the limiting factor is the margin. And
Yeah.
so sizing for the trade is really, really important, because otherwise you could, as you have with your brother, you could end up in a position where you can't do anything else
Right.
other than the diagonal trade. And at some point you could even be forced to just close it because you kind of can't margin it anymore.
Yeah. Like the other day, I wanted to do something in his account, but I couldn't because we hit up. So I just closed one of the contracts,
Yeah.
you know, to give myself enough room for a roll.
Yeah. 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 But that's really useful. Thanks, Dale.
Oh, my pleasure.
Dale, what is the back test on the strategy?
It's the back test on the strategy.
Yeah, like, I mean, when it fails.
Yeah. Let me see if I can find, my back testing isn't going to be nearly as beautiful as Tammy's, because I mainly did it just for me, right?
Mm-hmm.
So all I needed to know was kind of how profitable it was at a certain time period. So you may choose to ask questions that I'll just say, I just didn't study that, right? So that's my.
For example, right now.
Here's 2019.
Yeah. Low,
and this was
low,
this is a double diagonal. So what I did is I put on both puts and calls.
Okay.
In each 2-week period, I reset it.
Mm-hmm. And
so this is the P&L for each 2-week period. There was 3 pieces of bad data. And sometimes you encounter that in this TOS. But over a year of doing one contract each, one put and one call, I was up $17,129 on one contract.
So double diagonal, meaning that you do the same thing on a put and on a call.
Yeah. And so that was just that. And so that's that result. Let me find another one on just a put diagonal. Let's say I've got a 2019 double diagonal, a rolling put call diagonal only. Once again, mine are not as beautiful, but this is a rolling. This is a rolling put call diagonal. So let's see. Here's a rolling call.
Rolling put call. What is it?
Okay, here's one on just the SPY instead of SPX. And this one is a put diagonal on just the SPY. I think I did 10 contracts on these. And this one looks like it was up $16,525 for the year doing 10 contracts, or it made $1,652.50 for the year per contract. The maximum buying power used was 18,500. And I did this one just on put diagonals. Here's the rolling put diagonals for 2020. And it looks like I did these a whole month at a time. And if you did them a month at a time, it was a lot more profitable, mainly because of the exploding. That's the first one that got my attention. Here's a 2018 back test of an SPX rolling put diagonal. And let's see if I can see the bottom line. I think it was a loser in 2018. Not a big
That's where
loser.
the VIX were very, very.
Not a big loser, but
Low.
$3,800 loser for the year, I think.
Seems like a lot of strategies seem to be losing in 2018, because I think Tanya said that the zero DTE didn't perform very well in 2018 either.
Rolling put diagonal in 2019 was up $10,754 for 2019.
So how many months in 2019 did you actually lose money?
Okay, let's
What was
look.
the kind of the sequential risk?
In January, I was up 71.43.
Okay.
In February, I was up 9.47. In March, it lost 38.04. In April, it was up 41.87. There's a few pockets of bad data. In July, I was up 24.35. In August, I lost 36.03. In October, I lost 24.79. In November, I was up 45.25. In December, I was up 14.03.
Right. So yeah. So you do have to be prepared for some swings here.
Yeah.
It's almost. I mean, your back testing almost seems to suggest that if you wanted to incorporate this as part of your core strategy, you kind of want to commit to doing it for perhaps a year at a time, because otherwise, you may pick. If you
might pick the wrong month,
August, I'm going to try it this month. And, and it might just not be a good month to do it. So to get the real, like many things, to get the full benefit of it, you need kind of the consistency.
Yeah, perhaps, or you back tested enough that hey, the strategy is a viable strategy. I might pick the time period and get unlucky. But you may encounter that if you move in and out.
Yeah, that's what I'm saying. That if you feel like this is a strategy that works for you and for your individual risk tolerance, et cetera, then maybe it's one that, like some people have a strategy of selling an out of the money put in IWM every 45 days out every month, and they do it every month regardless, or every week regardless. Right. You kind of want that kind of consistency, really, to get so that the expectancy works itself out as your back tests show.
Yeah, I would just, if you're trading an SPX, psychologically be prepared for an $8,000 a month swing per contract. If you don't feel like you could take that kind of a swing, then trade it in SPY, at a size that you feel. But I think overall, it's a profitable strategy. It's viable. I've tested it enough to where I'm comfortable trading it, but don't trade it too big, that it hurts you.
Dale,
wise words.
Dale, I have a question. Those months when you lost on your put diagonal strategy, did you try call diagonal strategy?
Did I try call diagonal strategy on those months? I didn't break it out that way. That would be a good thing to test.
Then I have a question for Bill. Okay. Being a computer geek, can he put together a program or SQL to try to do that?
That's for Bill. Bill, are you still with us?
Yeah, I've got a barking dog over here. Could you repeat the question? I'm sorry.
Being a computer geek, as you self-presented yourself, is it possible to write a little program in SQL or Python or something using data? I do have data.
Well, I'm a different kind of a geek. I started off as a programmer, so I understand what you're saying, but I've kind of moved into the sales role, and I work on security and networks and corporate America.
I
So
got you.
it's a little bit different. As far as the programming goes, I don't know if you'll ever get to a programming, because this is more of an art than it is a science.
No, I'm talking about this particular strategy. Could be programmed to be tried.
Yeah, you could talk to Dan, between Dan and Art, to see if that
Yeah.
would be a priority with them.
Are they interested in your strategy in general?
Well, they're interested in rolling put diagonals because Tammy has written it up as a strategy that if you choose the roll, on the second roll, you roll to a diagonal. So it fits within that.
Tammy
But
wants to.
She's trying to recover in two rolls.
Yeah, Tammy's using
it doesn't really work that well.
Well,
Tammy
Tammy wants to smooth out the equity line and eliminate as much of the drawdown as she can. So that's why she's not out there banging the drum yet.
And since Tammy's not here to defend herself, and since I'm recording it and they might watch this, I'll do my best to describe it. And if she wants to come on at some point and offer some more background, she can. But her strategy is to use it as a repair strategy, mainly because her focus is 0 DTE.
I understand. Yeah, and it's very valuable what she offered, because before that nobody thought about it.
Yeah.
I think to answer your question, though, Gregory, Art has talked about Pong evolving over the future, and who knows, it may be something that this does get into